Well, weakness continues on Dalal Street for the third day this week. The Nifty and the Sensex end near the day's low. Broader markets fall in line with key indices. The big sectoral drags were financials and metals yet again.
Vishal Mega Mart lists with a near 40% premium to its offer price. Sai Life Sciences debuts with gains of over 20%. And MobiKwik shines with a 60% listing gain before rallying even more.
NMDC is under pressure after sources tell CNBC TV18 the Karnataka government may look to increase the duty on iron ore, while Tech Wabag was in focus after 2,700 crores of orders from the Saudi water authorities got cancelled. Separately, Ambuja Cement is set to merge the recent acquisitions of Sanghi and Penna with itself. That's what resulted in Sanghi Industries falling off the cliff. Hello and welcome to Markets Forward, your go-to show where we aim to get you up to speed with today's trading session and gear you up for tomorrow's session as well. I'm Nigel, with me is Rima. Well, Rima, markets going dull into the big event, which is the Fed, but I don't think it's still so bad. I still believe that, sometime in the next couple of days, we should see a bit of a bounce. Maybe just some jitters, right? Before the big FOMC decision we've been talking about and what the Fed signals about future rate cuts for, the next year. But, markets still disappointing, right? Third day in a row that we sold off. And today, broader markets also under pressure. Well, that's right, Rima. That was a bit of a worry because last few sessions, we've seen that the Nifty is under pressure, but the broader markets, in fact, did well. Today, there were select pockets of strength, but otherwise, the broader markets, they fell in line. You're looking at the breadth of the market as well. You had three stocks that were declining for one stock that was advancing in trade. The outperforming index, though, and from the Nifty pack itself, we had a few of those, frontline names that did well. Dr. Reddy, Cipla, both of them were higher in trade. And this pharma index actually did manage to go home with a gain of close to 100% on the day that the Nifty was down more than 100 points. Metals, though, continues to drag. Softer data points, stock-specific action. China continues to struggle. That index is down close to around 4% just in the last three sessions or so. The Nifty PCR, though, is moved to the lower end of the band, which is at around 0.65 odd. Normally from these levels, you get a bit of a bounce, but the big cue is going to be later tonight. The Fed will be taking a decision. Most on the street, or you have the Fed futures that are factoring in a 95% probability that they'll go ahead and cut rates by around 25 basis points. Commentary of Mr. Powell will be a track, though. Unless he surprises very negatively, I think the markets are due for a bounce, but we'll have to see how that goes. Today, we ended at around 24,200.
Indeed, pharma did well. There was one pocket where there was a little bit of green. The top gainer on the Nifty today was strength, but other than that, metals, banks, PSUs, all of them quite weak in trade. Here's a lineup for what we have for you on our show today. The top movers and shakers with Hormuz, Tech Wabag, NMDC, Ambuja Cement, buzzing in trade. We'll get you the reasons behind that and some bumper listings. In fact, all three of them, and we'll discuss. And last but not the least, we'll delve into the key market events to watch tomorrow. But first up, as promised, it's over to Hormuz. He's at the big wall with the top stock movers of the day.
The market's in the red, but the day certainly belonged to the new listings, didn't it? But we start off with the top stocks that managed to drag the Nifty down for yet another day, managing to hold on to Friday's lows, but ending in the red nonetheless. ICICI Bank, HDFC Bank, of course, the usual suspects there. Tata Motors also ending at the lowest point of the day, extending its losses after already correcting over 35% from its peak already. The sector that bucked the trend today was pharma, but before that, we get to PSU banks because they were the top sectoral loser for the second day running, and every single constituent of the index ending in the red and ending at or below or just at the lowest point of the day. A sector that bucked the trend, as I just mentioned, was pharma, and it was these pharma names that managed to close in the green. With Concord Biotech is the stock that I was referring to. Mankind Pharma, Aurobindo, Lupin, Dr. Reddy's, most of them ending with gains of anywhere between 2 to 5%. A lot of stocks reacted to news flow, and it was Tech Wabag that was in the news, but recovered slightly from that earlier 16-17% fall that we had. NMDC, of course, reacting to the CNBC TV18 news break, almost turning negative for the year. Sanghi Industries ending 12% lower. Sugar stocks didn't do well, and KFin Tech, after that positive brokerage commentary that came in, saw a good day at the office. And lastly, some stocks that did well on the back of strong volumes in today's session was Bharti Hexacom making an entry there, 6.5% higher today. Craftsman Automation saw a very sharp surge, not a lot of volumes, but still 12.5% higher. And Radico Khaitan, EID Parry too, having a good day on strong volumes.
Thank you very much for that. Let's get in our guest, Sudip Bandopadhyay, Group Chairman at Inditrade Capital, and Shrikant Chouhan, EVP at Kotak Securities. Shrikant, do we head lower from here on tomorrow, or do you think we're in for a bounce?
Good evening, everyone. I think, we believe that the markets are correcting from the highs, but the overall pace of the fall is gradual, and it is heading gradually towards the important supports levels like 24,000, 24,050, where the market has taken support multiple times in the past. In fact, around these levels, as the Nifty is approaching, if we go through with the option chain, then there also we are seeing good amount of oversold sort of activity. The put call ratio for the month of December is close to now 0.80, which clearly indicates that the markets are falling, but at the same time they are turning oversold. So maybe after hitting the levels of 24,000 or 24,050, I'm expecting market to rebound in next 1 or 2 days of time. So in case if there is any further more fall because of any reason tomorrow, and today we have to face the event of Fed meeting. So in case if we see any lower opening tomorrow, then I think we should look for taking some contra bets in this market, because I am expecting market to remain in a range of 24,000 and 24,700 for next couple of weeks. So till the markets are in between this range, I think we should look for taking some contra bets of going long and going short at resistance levels.
Okay, all right. Let's get in Sudip as well into the discussion. Well, Sudip, today there was some negative news flow on Tech Wabag. We'll get to that in just a bit. But any view on the stock? That order cancellation clearly spooked the street.
Well, Nigel, this has been one of our favorite stocks and favorite sectors as well. Some of these events are probably a good opportunity for long-term investor to look at picking up these kind of good quality stocks in the favorable sectors. So yes, the Saudi order cancellation is a blow to the company, but I don't think there is anything specific to the company which led to the order cancellation. I think it's a general order cancellation by the Saudi authorities. And of course, it does impact Tech Wabag as far as their order book is concerned. And 2,700 crore worth of order getting cancelled is big. But I would think that from a long-term investor's point of view, the price correction which we did see today is an opportunity. The stock may languish for some more time because of this order cancellation. But again, I would say for long term, I think it's a great stock and worth buying post this correction.
Thank you very much for that. Let's get to NMDC under severe pressure today, and we learned from sources that the Karnataka government may be looking to increase the duty on iron ore. Sudarshan is here with the details. Sudarshan.
So first, talking about the news, reports suggest that Karnataka government is looking to increase the duty on iron ore mining, and that announcement is expected to happen very soon because the draft related to this has already been circulated. Now, why NMDC were under pressure? Because of total NMDC's mix, Karnataka forms nearly 30%. That's the reason you saw a sharp fall in the stock and had closed with a cut of almost 6%. And Karnataka government from the duty is looking to raise almost 10,000 crore for this fiscal. Now, related to this, Supreme Court in its last order had announced that government on the royalty that it receives from companies may charge retrospectively, and that retrospectively would be from 2005. And that's considering all these things, NMDC and even JSW Steel were under pressure because Karnataka government's announcement can come anytime soon.
Okay. All right. Thanks a lot for that, Sudarshan. Sudeep, your view. NMDC was under pressure today. I think the rough estimate that I've got is, as of now, every 100 rupees of sales that they do in Karnataka, 53 rupees goes to the Karnataka government. Karnataka government is saying, let's milk it more. Let's go ahead and increase duties even more. The problem is that mining may become unviable itself. So they have to find some middle ground. And in all probability, it could go to the court of law as well. But your view of the stock, do you think 7% cut is an over-exaggeration?
Well, Nigel, I think what you mentioned just now is my view. It will get into litigation. If it becomes unrealistic, at some level, it will get thrown out. So we have to wait and watch. Uncertain time, definitely. But if you are, trying to have a long-term view, NMDC is a great stock to own. And this correction, 6% correction, which we did see today, and maybe some more correction coming going forward, will be an opportunity to pick up the stock. But if you are picking up the stock, taking this opportunity, be prepared for some volatility for some time. These things don't go away very, very quickly. It has a tendency of lingering for some time, and you have to be prepared to stomach that volatility.
Okay, got it. All right, Sudip, thanks a lot for that. Well, gentlemen, I wanted your view on Ambuja Cements next. So let's first run you through the newsprint. Ambuja Cements, they have two subsidiaries. One is Sanghi Industries that they acquired, and that's the listed one. The unlisted one is Penar, Cement that they acquired in this year itself. Now, what they've gone ahead and said, let's merge all these three. So Sanghi as well as Penna will get into Ambuja Cement. And this was on expected lines. It had to happen at some point of time. The rationale that they've given is it simplifies the group structure, makes things easy as well. And the timeline is around a year, provided all the regulators give their go-ahead, which I don't think should be much of an issue on that front. Now, the ratio is most important, particularly for the listed entities. And the ratio that they gave, 100 shares of Sanghi Industries you'll get close to around 12 shares of Ambuja Cement, which was in favor of Ambuja, and that's why Sanghi Industries was clunked back in today's trading session. For Ambuja, in the longer term, it's a positive, but for Sanghi Industries, it was a negative. That's why both those two stocks went in opposite directions. Now, ACC is the other one that is in focus, because if they're going to be looking at some consolidation, bringing all the entities under one, well, ACC at some point of time could probably get merged into Ambuja Cements as well. But will it be in favor of Ambuja Cements? That was the worry. That's why if you pull up the intraday chart of ACC, you'll see that stock was under pressure as well. Well, let's get in Shrikant into the discussion. Shrikant, where's support for both these two, Ambuja as well as ACC? Anything you like on the charts?
See, Nigel, both these stocks are in a range, and most of the time, whenever the stock is like approaching to the levels of 580, 590, especially Ambuja, it corrects back to the levels of 530, 540. So this time also, after hitting the levels of 580, 590, I'm expecting stock to correct back to the levels of maybe 540 sort of levels. So yes, from here the stock can correct back to the levels of 540 or 530. So at these levels, one should look for taking some profit if there is any trading position. And for ACC, I think it is correcting from the highs and it is consistently forming lower top, lower bottom sort of series. So from here, the stock can fall to the levels of maybe 2050 or maybe 2040. So at these levels, both the stocks are not attractive with a trading point of view. And if there is any further more correction, then I think we should look for taking some contra bets at important support levels.
Let's move on now to Tech Wabag that was under pressure today, more than a double-digit fall after losing an order worth 2,700 crore rupees from the Saudi Water Authority. Significant order. Yash joins in with the details. Yash.
Well, Rima, the stock did recover a bit intraday, but still it was down about 11-12%, and that was on the back of the information which came from the company on the exchanges overnight. The company informed the exchanges that Saudi Water Authority has cancelled a 300 MLD mega seawater distillation plant. The order, which was awarded to Tech Wabag in September 2024. It was a large order, 300 MLD, as I said, worth 2,700 crore rupees. The company also informed the exchanges that Saudi Water Authority has notified all tender participants on cancellation of this tender. So it wasn't like the order was awarded to some other entity, taking it away from Tech Wabag. The tender itself was cancelled by Saudi Water Authority. We reached out to the management of Tech Wabag, and there was some important clarification which came from the company as well. The tender, which was, as I said, 2,700 crore rupees from Saudi Water Authority, was cancelled as Saudi Water Authority wants to recalibrate the order size and scope itself. The company also said that they expect Saudi Water Authority to float the tender and invite bids again in the next couple of weeks, and Tech Wabag would participate again as far as that bidding process is concerned to bag the same order in whichever size and form it comes through in the second round. Also, importantly, the management told CNBC TV18 that they are confident of booking orders worth about 3,500 crore rupees, which has been their guidance in the third quarter of FY25.
Thank you very much for that. Shrikant, quick word on the charts of chart of Tech Wabag. It's been so strong for the last 2 years. Does the fall today break this upward trend that the stock has been, or do you think it's a buying opportunity technically? Shrikant, you're on mute.
So technically, if we consider the technical pattern of Wabag, then it has been consolidating. And now, like after hitting the lowest levels of 1550, 1560, if we see the volumes, then they are like abnormal. So while looking at the entire technical pattern, I think the stock has reached to its extreme level. And from here, again, the stock can move towards its upward boundary, which is close to 1850 or 1860 sort of level. So at this level, I think it will be an opportunity for traders as well as investors to create some long position.
Okay, all right. Well, let's focus on some of the new listings then. Retailer Vishal Mega Mart listed at around 104 rupees per share. That was a 34% premium in comparison to its issue price. Earlier today, we spoke to the MD and CEO, Mr. Kapoor, and he discussed the possible risk in the retail segment. And despite the demand sentiment, they are optimistic about the future. Let's listen in.
About 50% of our growth is coming from same-store sales growth, and the balance is coming from new store openings. And if you were to specifically focus on the risks, of course, we would face the challenges if there are any on the macro front. We've done that in the past also, and that would always be something which is on the agenda. Equally, I would say that to ensure that we are the best offering for our customers and consumers in a very dynamic and fast evolving retail scenario in India would always continue to be a challenge. So yes, the challenges are there as much as any other consumer businesses, but we remain optimistic about the future.
That's Vishal Mega Mart. Moving on, payment platform One MobiKwik also saw a stellar debut on the bourses. In fact, even the subscription was super strong at 120 times. Upasana Thakur, the CFO and Executive Director, discussed the possible products the company may foray into the future. Listen in.
In addition to that, given that we have a full KYC base on a large user base of 160 million users, roughly 60 to 70 million of our consumers are full KYC'd. And on the merchant side also, we have 4.3 million KYC'd merchants. So our distribution of financial products, be it insurance products, be it saving or investment products, or be it credit products, they will be the cream on top of the core payments business. And that is sort of how we expect to continue growing in the manner we have been demonstrating in the last few years.
Well, and Sai Life Sciences also made their D-Street debut today. They listed at around 650 rupees a share, which was a 20% premium in comparison to its IPO price. We spoke to the management earlier. They detailed their capex and growth plans. Let's listen in.
We actually do have significant capex plans going forward. We are working on those capex plans along with our customers to figure out what is important for them in terms of technology platforms, scale. So we are actually working very closely with our teams to outline a capex plan, which we will finalize in the next few weeks. So I think what you will see is double-digit growths should not be a challenge mostly going forward, but I think the opportunity is much more significant than that as we look at it.
Okay, all right. Well, I think on that note, though, we'll slip into a short break, but I think we'll thank both our guests, Sudip as well as Shrikant, for joining in and filling us in with your view on the markets, as well as all the stocks that we did discuss. Slip into that break, come back. We'll get you all the top market voices that joined in earlier today, and also we'll tell you all the top events you need to track.
Welcome back. Let's get to the corporate conversations that we had on CNBC TV18. First up, GE Shipping. The management says that freight tanker rates have been weak, leading to poor refining margins. Small tanker rates are down $10,000 to $15,000 for a day, while crude tanker rates have declined by $10,000 per day. They added that oil demand has also been poor, especially for transportation of fuel.
Well, next up is Narayana Health. The management says that they're looking at inorganic growth, but nothing is finalized as of now. They add that they'll take a price hike of mid-single digits in early 2025. while Zydus Wellness Management says that they're well prepared for double-digit growth across the portfolio. The company is targeting 4 million outlets reach versus the 3 million right now in the next 2 to around 3 years. They expect the EBITDA margins to be in that vicinity of around 17 to around 18% in the next 2 to 3 years, with revenue growth in the teens.
And as we wrap the show, we leave you with the big market events to watch tomorrow. Upasana is here for that.
Well, first up, let me start with the global economic cues that we'll be watching out for. Coming to US first, the FOMC press conference will take place today late in the night, and Fed will give out its final interest rate decision. US will also report its initial jobless claims data. Now, UK and Japan, both of these countries will also report their final interest rate decision tomorrow. Now, back home on the IPO front, companies like Transrail Lighting, Sanathan Textiles, Dam Capital Advisors, Concord Enviro Systems and Mamta Machinery, all these companies, IPO issue opens tomorrow. So all in all, looks like quite an eventful day tomorrow.
Okay, all right. Thanks a lot for that, Upasana. Well, on that note, we'll wrap up on this edition of Markets Forward. We'll be back, though, with more news and updates. Don't go anywhere.